Good morning, this is Bloomberg Daybreak Europe. Happy Thursday. I'm Tom McKenzie in London. These are the stories that set your agenda. Fed Governor Lisa Cook says she will not be bullied into stepping down as President Trump demands her resignation over allegations of mortgage fraud. Dip buyers step in late in the day to steady US markets as investors stand by for the Fed chair's speech at Jackson Hole. Meanwhile, FOMC minutes from the Fed show most officials seeing inflation as more of a concern than the labour market. Plus, US Vice President JD Vance says Russia wants territory that is under Ukraine's control, with reports that Russia's foreign minister says Moscow and Beijing must be included in any security guarantees. So there was a bit of dip buying towards the end of the session on Wall Street yesterday. Nonetheless, you did end up with a fourth consecutive day of losses for the S&P 500. The Nasdaq 100 also ended in negative territory. The sentiment is turning around a little on the edges. But let's be honest, this is really all about the build-up to Jay Powell and that speech out of Jackson Hole on Friday. European futures, after some modest gains across European stocks yesterday of 0.2%, currently flat in terms of the futures picture. Much more interesting when it comes to the FTSE 100 here in the UK. The gains coming through again, the 24th record high for UK stocks yesterday on that defensive tilt. Today, UK futures, FTSE 100 futures pointing flat as well, also looking for direction, but with the context that you punched through that record high, 24th of the year yesterday. S&P futures then, after 4 straight days of losses, largely unchanged. There is unch on the screen. This is a market that needs that next catalyst, and it is likely to be the speech out of Jackson Hole. Let's flip the board then and have a look cross-asset. Treasuries, the last time I checked, looking relatively stable, 429 on the benchmark US 10-year. Euro-dollar at 116. You had Christine Lagarde yesterday coming out and saying that there is going to be a bit more pressure in terms of the growth story for the Eurozone, despite the fact that you had that US-EU deal. We have PMI data out later today. We'll give you more colour in terms of the manufacturing and the growth picture of the Eurozone. Brent trading at $67 a barrel, up 0.4% on some inventory stories, maybe slightly tighter than had been expected. And Bitcoin, the sell-off on crypto continues edging lower in the session today, down 0.5%. Let's cross over right now. Minimum low standing by in Hong Kong for a check on the Asian markets and the bond action in Japan, front and centre as well.
Yes, Tom, largely the same sort of themes coming through in the Asian markets. You can see the Asian Pacific benchmark largely unchanged. Investors holding their breath for this Jackson Hole meeting, and particularly investors in Japan really looking out for any comments from Ueda as well that could provide any guidance for the rate hike expectation for the BOJ ahead of the CPI data that we will get tomorrow from Japan, expected to show inflation remaining above 3%. But elsewhere, we are seeing the Kospi and TAIEX also lifted by this dip buying in the tech sector. If we flip the board, there's been so much focus on this rotation out of tech stocks in the US, right, over concerns around valuations and the pared back rate cut expectations. But here we are seeing the dip buyers come through. Samsung, Avantas gaining, TSMC as well, up 1.3% after the biggest single day loss yesterday in about 4 months. That's helping to lift the TAIEX as well. But flip the board, take a look at what's happening in China. We are seeing healthcare stocks really helping lead the gains in the CSI 300. That's after Premier Li Qiang visited some biomedical makers and labs and talking about how there is still more prospect for growth in this sector and more prospect for policy support to nurture the sort of breakthroughs in innovation there. The Hang Seng seeing quite a different picture because we have these tech stories, idiosyncratic stories, corporate headlines coming out, particularly the earnings from Baidu really showing quite a dismal performance. If you flip the board, Baidu reporting earnings yesterday, revenue was down about 4%. Investors particularly punishing the stock over concerns around its core search engine business, which saw a 15% decline on ad sales. So this is now one of the cheapest Chinese internet stocks out there. Tencent gaining today because of a strong debut of its mobile game Valorant that came out on mobile phones in China this week. The first day sales on iPhones are about $1 million when it comes to gross player spending. So really, really strong indication of the company's strategy when it comes to its evergreen franchises. And we can see its competitor NetEase also gaining. These are the two sort of big gaming plays in China. Kuaishou as well reporting earnings, expected to see pretty strong demand, strong revenue and net income forecast as well.
OK, the earnings focus when it comes to Asian tech and Chinese tech. Min Min Lo in Hong Kong with a check on the broader markets as well. Thank you. Now, Federal Reserve Governor Lisa Cook says she will not be bullied into stepping down from the central bank. This after President Trump called for her resignation over allegations of mortgage fraud. Federal Housing Finance Agency Director Bill Pult says Trump has cause to fire Cook.
She lied, in my view, in her statement tonight because she said that the first time she heard about it was through my tweet. She didn't hear about it from my tweet. There's no way. She doesn't follow me on Twitter. I think this lady is a professional liar. She shouldn't be at the Federal Reserve. She's going to resign, in my view. And if she doesn't resign, I do believe that the president has cause to fire her. And that will be up to the president whether he decides to do that or not.
Let's bring in at this point Bloomberg's Asia economy reporter Katia Dimitreva. So Katia, another target for the Trump administration at the Fed. Talk us through what these allegations are, why exactly there are now these calls for Lisa Cook to step down from the Federal Reserve.
Yeah, and they're pretty big allegations as well. So these allegations are about mortgage fraud and falsifying mortgage economic details as well as housing details, property records. And specifically what this points to, or what the accusation is that Lisa Cook claimed a mortgage, or claimed that a mortgage would be for a house that would be her primary residence, and then a few weeks later did the exact same thing for a different property in a different state. And so, of course, that would be raise a lot of eyebrows. Now, it is important to note that there has been no evidence submitted, and as well, there's no charges that have been laid. And of course, we heard from Lisa Cook as well, who posted on Twitter or X saying that she would not be bullied into stepping down. So there's no, it doesn't look like she's going to be stepping down or moving away or opening that position at all. And President Trump has as well called for her to resign. So it's not just Bill Pult, it's also the president himself who tweeted or posted on social media saying that she should step down and this would be grounds for dismissal.
And Katia, conveniently, serendipity may be potentially playing a role here. Resignation, of course, would create, if that's what happens, if that is the outcome, if there is a resignation, if Lisa Cook does step down, she says, as you point out, that she has no intention of doing that. But if she does, and if she was to do that, then you'd have another opening at the Fed.
Yeah, this is really just the latest attack by the administration on the Fed, but it's also, as you point out, opens up another role. If Fed Chair Jerome Powell, his term is due to expire next year. You also had another Fed governor who resigned earlier this month, who's being replaced by Steve Moran, at least temporarily. He's currently was the chair of the CEA. And then if you have this third opening, and Lisa Cook, we should note, sits on the FOMC and actually is involved in setting rate policy. Now, she's seen as kind of a neutral voice, neither a dove, not a hawk, kind of something in between. But it does show you that there could be scope for, if she's replaced, she's a Biden appointee. She's the first African-American woman on the board. She could be replaced by a Trump appointee. And we did see in the July meeting that the vote was 9-2 to hold rates. And those two who voted against holding rates were Trump appointees. So that would kind of pave the way for that to happen. Right now, the Fed board, at their next meeting in September, looks like, at least the market expects, that they're going to be cutting rates, probably not the outsized rate that the Trump administration wants to see. So, of course, this creates another opening to get someone else on the board that Trump likes.
OK, Bloomberg's Asia economy reporter Katia Dimitreva. And worth noting as well, no charges have been filed, as Katia was saying. And Cook has said she has no intention of stepping down, as we noted as well. We'll continue to keep across that story for you as it evolves. Let's get more on the Fed right now. The Fed minutes also in focus. Most officials seeing inflation as more of a concern than the labour market. This from the minutes back in July, the July meeting. For more, let's bring in Bloomberg's Valerie Teitel, who, of course, monitors the market reaction to this. Val, do we see these minutes as dated, or do we see them of further evidence that Jay Powell is unlikely to pivot dovish on Friday?
Look, that is the big question out there, Tom. In some way, these minutes are dated because the labor market data, frankly, has changed between now and this July meeting. But it's all about whether Powell acknowledges that change when it comes to his Jackson Hole speech due tomorrow at 3 p.m. London time. But the minutes did show that majority saw inflation risk ranking above the risk to the labor market. It's no surprise there. It's why they voted for rates to be on hold. Several saw rates not very far above neutral, which I found interesting, that they're not seeing these rates at a very restrictive level at where they are. And several noted that some asset price valuations are elevated, which again maybe poses some questions as to why the Fed is cutting rates if they're worried about asset price valuations. But as you said, the market really did shrug this off. There are really more reactions to those allegations and the Trump's words about Governor Lisa Cook than there were to these minutes yesterday. We're still holding pretty steady at around an 80% chance of that Fed cut come September, but it's all down to Fed Chair Powell's speech tomorrow at Jackson Hole. Jackson Hole does begin today. It continues on into the weekend, but the real show is that keynote speech at 3 p.m. London time tomorrow. And I thought it was interesting, Tom, to remind our viewers of the theme of Jackson Hole is actually quoted the labor market in transition, which is somehow implying just slightly that there will be a transition in views, perhaps, from the Fed chair. Maybe that's me taking one step too far. But his speech at 3 p.m. tomorrow.
Well, to your point, given the framing then, there's certainly an opportunity to get more details, more reaction and more context from the Fed chair in terms of how that labour market of the US is evolving. Bloomberg's Valerie Teitel, thank you. Here's what else to think about then today. We're going to get that data. Of course, I mentioned this at the top of the show. Euro area flash PMI, so a gauge in terms of the health of the Eurozone economy. Rates here, of course, at the ECB set at 2%. They've met their inflation target. But is growth going to start to slide further on the back of these tariffs imposed by the Trump administration, even as you have this deal, of course, on 15% between Brussels and Washington? At 1:30 p.m. UK time, we're going to get the US jobless claims, talking of the labour market, some additional colour and detail there that will be important. And before the market, another gauge on the health of the US consumer with Walmart earnings as well. The biggest grocer, of course, in the US reporting numbers. And a further gauge and touch on the strength, the resilience, or lack thereof, of the US consumer. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, go on the terminal. And the dip buying in the tech story yesterday is part of the focus in terms of the reporting. Coming up, talking of tech, Microsoft curtailing Chinese companies' access to early warnings about cyber security flaws. The details next, and the latest tech stories as well, including OpenAI. Plus, later in the programme, we're going to be speaking to Melanie Debono from Pantheon Macroeconomics for her views in terms of the inflation impacts, the labour market of the Eurozone, and whether or not the ECB has space to go with its own additional rate cut before the end of the year. Stay with us for that conversation. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Thursday, everyone. Microsoft is limiting Chinese companies' access to early warnings about flaws in its technology. This after an investigation into whether a leak led to a series of hacks exploiting vulnerabilities in its SharePoint software. Our Asia tech correspondent, Annabelle Drulers, is in Hong Kong with the details and a touch on other tech stories making the news this morning. Let's start with Microsoft then, Annabelle. What exactly has led to this decision? How significant is it? And what is the Chinese tie-in to the Microsoft story at this point?
Well, the tie-in is pretty strong, actually, because, of course, Microsoft has faced a range of different hacks. I mean, the most recent, as you said, was SharePoint, but they have very much been linked back to China, if not officially, but still, there's certainly been a lot of question marks over that. This change is to try and, I guess, crack down on that and to try and perhaps solve one of these issues or try and solve one of these issues. But essentially, Microsoft operates what's called the Microsoft Active Protections Program, or MAPP. And the goal of this program is to give security software companies early details on product flaws so that then they can provide updated protections for their customers in a faster time frame. So that's a program that operates worldwide. But what's going to happen now is that access is going to be limited in countries where MAPP participants need to report vulnerabilities to their governments. And importantly, that is something that needs to happen in China. And so, as you said, these hacks, SharePoint software, we had previously reported that there had been concerns that hackers could have been aided by MAPP partners leaking the flaws. So now MAPP participants in places like China aren't going to be receiving any sort of advance warnings on flaws. They're just going to get the general details of them when the security fixes are released. So that's sort of the big update out of this.
Yeah, and Microsoft's still widely used in China, despite the government's best efforts to try and encourage some companies there to migrate over to Chinese solutions. Meanwhile, Annabelle, Google coming out with a suite of new hardware products at a time when it's getting a little bit more confident in terms of its large language models, specifically Gemini.
Yeah, that's right. And you saw that really. I mean, they have grown increasingly confident in that, not just Gemini versus ChatGPT, but also how Gemini integrated into Google's products also is more competitive against Apple's offerings, especially because Apple Intelligence has been delayed. So we had this big fanfare, sort of a star-studded event as well overnight or on Wednesday in the US, but several different smartphones have been announced. So this is the Pixel 10 series, all the way from the standard model up to the Pixel 10 Pro Fold, priced from $800 to $1,800. There's the Pixel Watch that's going to retail for up to $400. Earbuds as well for $130 But as you said, more deeper integration of the Gemini AI assistant. And they are really determined to position that as something that's more than just a chatbot or a voice assistant. They're also really leaning in and emphasizing some of the agentic AI capabilities that come with it as well.
OK, so from a company that is confident about its AI prospects to one that is less confident, which is Meta, Annabelle, and the changes, of course, to the team there, the superintelligence team at the heart of Meta. And the Wall Street Journal reporting that after this massive hiring spree and $100, $200 million checks being written for some of this AI talent, now Meta is putting a pause on hiring.
Yeah, and this is actually a continuation of the story that we were talking about yesterday as well, because so the reporting was that Meta, as you said, they've spent billions of dollars on this efforts to build up this superintelligence team. It's led by Alexander Wang, who's recently joined in a formal capacity as the chief AI officer, and they're splitting into 4 different teams to try and make the most of the use of all of the talent that's come into the business. Now they're also saying that the company, that in addition to splitting into these 4 divisions, they're going to have a headcount hiring freeze in place, so nobody new can come in, and also nobody is supposed to be shifting between the teams as well. So that was the reporting from Wall Street Journal, actually confirmed as well by the business in the last few hours. But as we said, trying to make the most out of all of the money that they've spent, and also trying to position this as sort of just basic organizational planning that the company is taking as well.
OK, our Asia Tech correspondent Annabelle Drewler's across all of our stories for us with important updates across the tech space. Annabelle, thank you. And humanoid robots are in focus when Bloomberg Tech Asia, co-anchored by Annabelle, of course, returns this week. Here's a little sneak peek.
Technology is developing so fast.
My belief is that the humanoid robotics will not only build the biggest business we've ever seen by many multiples, but it's going to be also the biggest product launch we've ever had.
We aim to reach an annual delivery volume of over 10,000 robots within the next 4 years.
This year we are building about 2,000 robots, and next year we plan to build over 10,000 robots.
Prototype is easy, but mass production is difficult. To make them reliable, can work for a long time without maintenance, is not easy.
We're seeing like the robots are getting smarter these days. They're better explaining themselves. And the magic ingredient is, of course, about the AI.
Whatever AI produced could be deployed in the robotics. That's true.
I think it's the best time to be an entrepreneur in China.
I think the whole world is seeing the opportunity for this new generation of robots to expand significantly. And so I think there's just a lot of promise in this industry right now.
OK, well, tune in on Friday to catch that on Bloomberg Television. Subscribers can also watch on the terminal, of course, using our TV Go function. It will also be available on YouTube later in the day. Coming up, Oaktree Capital's Howard Marks says US stocks are in the early days of a bubble. We hear more from that interview next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Oaktree Capital's co-chairman, Howard Marks, well, he's warning that US stocks appear to be in the early days of a bubble. Marks spoke exclusively to Bloomberg about his concerns over rising valuations and what he describes as investor complacency.
This is all just feeling and an opinion. None of this is factual, but it does seem that stocks are expensive relative to what I call fundamentals, or you might call reality. And, the outstanding reason, I think, is that, there hasn't been a serious market correction in 16 years. So people get out of the habit of thinking about market corrections. The biggest single mistake, I've been thinking a lot, what is the biggest single mistake investors make? And I've concluded that it is that they conclude that the way things are today is the way it'll always be, and the things that have been happening will always continue to happen, whereas reversion to the mean is much more likely. So I just think that it's worked very well. Being an equity investor has worked very well. Doing it on leverage has worked even better. Concentrating in a few stocks has gone very well. Investors are by nature optimistic, and that optimism dies hard. I just think that the fluctuations of the market are mostly related to psychological fluctuations, and people go from neutrality to liking stocks, to liking them a lot, to liking them a ton, to liking them too much. And that's the continuation that creates bubbles. And, we probably in the early days of that.
When you talk about liking, Howard, maybe liking these assets a little bit too much, can you put into perspective the last time you saw this type of environment that left you thinking maybe some of the opportunities aren't as great when it comes to buying some of these assets at current valuations? Is there another time that this sort of reminds you of in any capacity?
Well, I guess, Lisa, the last time was probably around 97, when the market was kind of falling in love with tech stocks. And, the market was rocketing along. People were not worried about the level of valuations. People were extremely optimistic about the opportunities for the internet. Alan Greenspan famously cautioned that there might be irrational exuberance. Now I picked 97 because even though Greenspan was concerned about exuberance, the market went on to rise for another 2.5 to 3 years. So remember, I said we're in the early days.
Oaktree Capital co-chairman Howard Marks speaking exclusively to Bloomberg's Lisa Abramovich. Coming up, we're going to get the latest update on the euro area economy with August PMIs due later today. We're going to discuss the outlook with Melanie Debono from Pantheon Macroeconomics. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Fed Governor Lisa Cook says she will not be bullied into stepping down as President Trump demands her resignation over allegations of mortgage fraud. Dip buyers step in late in the day to steady US markets as investors stand by for the Fed chair's speech at Jackson Hole. Meanwhile, Fed minutes show most officials seeing inflation as more of a concern than the labour markets. Plus, US Vice President JD Vance says Russia wants territory that is under Ukraine's control. With the reports, the Russian Foreign Ministry and Foreign Minister says that Moscow and Beijing must be included in any Ukraine security guarantees. To the markets right now, where the next catalyst is likely then to be that speech by the Fed Chair Jay Powell tomorrow at Jackson Hole. You have had 4 straight days of declines for the S&P 500, despite the fact that you did see a bit of late day dip buying, as we mentioned, in the tech space. You still ended in negative territory. European stocks currently pointing lower on the futures picture, down by 0.1% after modest gains for European stocks yesterday. FTSE 100 futures currently pushing marginally higher after a fresh record high yesterday for the FTSE 100, the 24th of the year. S&P futures a little softer by 0.1%. Nasdaq 100 futures also pointing low by 5 points. Let's flip the board and have a look cross asset then. Treasuries relatively stable in the session. Oil prices a little higher on some reports around slightly tighter inventories. Eurodollar at 116, Brent up 0.5%, and Bitcoin continues to lose some pricing power, currently down 0.5% and 113,000 per coin. Now, to geopolitics and what we've been hearing from Russia. Efforts by the US and European leaders to broker a peace deal between Russia and Ukraine may be facing a fresh set of challenges. Bloomberg understands that Russia says it will only agree to security guarantees for Ukraine that give Moscow an effective veto over any future effort to defend Kyiv. For more, Tony Halpin, who leads our Russia economy and government coverage, joins me now. Tony, how can you have a security guarantee for Ukraine that Moscow might veto if Moscow is the aggressor?
Yes, this is one of the many unanswered questions that are being hashed out at the moment, because essentially the idea of security guarantees for Ukraine is, as you say, Tom, against Russia. And if Russia wants some say in that, then there's some question mark over whether it amounts to any kind of security for Ukraine. Europeans are still trying to work out some sort of idea around something called a NATO light assurance, which would give Ukraine some sort of military assistance and military commitment if it were to be attacked again. But the details there are still very vague, and there's a lot of discussion to be had, I think.
What do we understand from listening to the Russian foreign minister with so much experience and so much time in the field, Mr. Lavrov, about Russia's current position, Tony?
Yeah, I mean, essentially Russia is standing firm on what it wants, partly because it sees that this has been pretty successful so far. If you recall, at Friday's summit, President Trump went quite a long way towards the Russian position, basically accepting that Russia needs to get some Ukrainian territory as part of any settlement, basically accepting that there doesn't need to be a ceasefire before talks begin. And essentially that allows also the US to hold off from applying further sanctions. So Russia sees all of this, and it decides that actually playing hardball produces results. And this is the kind of thing that we end up with, that Russia saying, well, fine, you want to talk about security guarantees, here's what we want from it, you better give it to us.
What about this much-touted meeting between Putin and Zelensky? What have the Russians been saying in terms of their potential willingness or not to have that meeting?
Yeah, they're somewhat lukewarm on this. They have committed, publicly at least, to increasing the level of official taking part in the direct talks between Ukraine and Russia from the current fairly low level on the Russian side. But that's very far from committing to Putin sitting down at a table with Ukraine's Volodymyr Zelensky. The Kremlin's position has always been essentially that Putin will sit down with Zelensky at some point, but that will only be if there's an agreement on the table for them to sign, and both sides are still very far away from that. So it looks like Russia is not very enthusiastic about a bilateral summit, whatever it is that President Trump says was agreed. So far, at least publicly, the Kremlin isn't playing ball there.
Tony Halpin, who leads our Russia economy and government coverage, on some detail and nuance to the whole Ukraine-Russia story. Tony, thank you. Meanwhile, traders are looking ahead to today's euro area PMI data for August. The survey is going to give investors an up-to-date indication of just how well Europe's economy held up in the month that higher tariffs, of course, were imposed by the US. Joining me now is Melanie Debono, Senior Europe Economist at Pantheon Macroeconomics. Melanie, good morning. Thanks for joining us. To what extent are we going to see the tariff impact then filter through in the PMI data later today?
We think that a fall in the new orders component of the manufacturing PMI, which is a chunky 30%, will have fallen in August because many will have held back from making new orders or even pulled back certain orders, certainly because tariffs have risen, but also because there's confusion in certain sectors over whether or not tariffs have actually come in yet. So for now, we think that actually the Eurozone composite PMI is going to fall today, showing that the first hints that actually, there's been quite a decent hit from the tariffs on the Eurozone economy. These are the first economic indicators for us for August.
OK, so the hit is there, and we're expecting to see that from the PMI data later today in terms of the tariff impact on growth, with new orders in focus for you and the team, Melanie. What about the inflation story for an ECB that has got to that 2% target? How convinced are you that we stay at 2% when it comes to Eurozone inflation through the end of this year?
Data yesterday confirmed that inflation held steady in July at 2%. But for now, we think that inflation is going to start rising to year end. There's base effects that will turn in energy, and food inflation is likely to continue to creep higher. The only thing that we see is a slight fall in the core in August before it also joins an uptrend. So at the end of the year, we have the headline Eurozone inflation rates at just over 2.5%. Still, we think that the ECB will probably cut in September, at least for now. And that's because we see the slight fall in the core rate in August, which is the latest numbers that the ECB Governing Council will see at that September meeting. And also because we see vulnerability in markets and vulnerability in the U.S. economy. Yesterday, Christine Lagarde, in a speech at the World Economic Forum, made it clear that the new EU-US trade deal will have to be factored into the ECB's September forecast. And of course, in its latest forecast in June had the tariff rate at 5 percentage points lower than that's been agreed. So it is very much likely that the ECB will have to pull down its GDP forecast for the second half of this year.
OK, so to be clear, Melanie, because this is not a consensus call, your counter-consensus with this call that the ECB will cut again in September. And for you, that's because the focus will be on less on that inflation pickup that you forecast and more on the economic slowdown.
Yes, that is correct. And because we have the core coming down, and that's, again, it's base effect driven, but we do have the core coming down after it's been stuck at 2.3% for 3 months, slightly edging down to 2.1% in August. So that should sort of alleviate some concerns that there's entrenching going on here.
What is all of this doing, the tariff impact to the labour market of the Eurozone? We're spending a lot of our time right now trying to gauge the health of the US labour market in terms of how the Fed is going to be factoring that into its next rate decision. And maybe Jay Powell will talk about that on Friday. How resilient is the Eurozone labour market to 15% tariffs?
The labour market has been extremely solid. I mean, it went through COVID without, there was an increase in the unemployment rate, but it came down very quickly. And that's a testament to government help that was put through in Europe, largely short-time work schemes, which ensured that many people stayed on their wages. These schemes are still in play now. And so if the economy is hit hard, again, most firms will probably turn to them. And it's unlikely that we're going to see such an increase in the unemployment rate. Definitely not anything to the extent that we expect in the US. The Eurozone labor market is very much continuing solidly.
OK, solid, resilient labour market of the Eurozone. Before we let you go, Melanie, then, as you project out to 2026 and you factor all of these different elements into your forecasts, what is your current view in terms of the growth picture for Europe next year?
So after we see GDP declining somewhat in Q3 this year and then only rising by 0.1 in this fourth quarter, we then have growth actually picking up quite substantially next year. And that is part of the reason why, if the ECB goes ahead with our call and cuts rates to the deposit rate to 1.75 in September, we actually have factored in 2 rate hikes next year because growth is going to pick up and so is inflation.
OK, so rate cut in September, but rate hikes next year. Melanie Debono, Senior Europe Economist at Pantheon Macroeconomics, with a preview as well of the PMI data and the impacts she expects to see in terms of the tariff read-through to the growth picture, the manufacturing data, of course, of the Eurozone. Melanie, thank you. Now some other stories making the news this Thursday. And we're going to switch focus because Israel is reported to have approved new settlements in the occupied West Bank, while its troops have now reached the outskirts of Gaza City. Earlier, Israel's military called up about 60,000 more reserve soldiers to join the war against Hamas, a sign that preparations are underway for a stepped-up offensive despite ongoing talks about a ceasefire. Here in the UK, Chancellor Rachel Reeves heads into the autumn once again on the fiscal ropes. Bloomberg understands Rachel Reeves is weighing a tax on high-value family homes at the point of sale to plug a £10 billion budget hole. £10 billion, I thought it might be higher than that. Bloomberg's James Walcott joins me now for the details, someone who watches and follows this very closely indeed and is well-sourced on this topic. James, what taxes then is the Chancellor and her team currently considering?
I mean, you're right to say it's higher than that. The reason being is it's 10 billion annually. So if you add up over the whole Parliament, it's then 50 billion pounds. Now, that leaves her with a problem of how you fill it. And some people might be thinking this is very similar to last year, except now she's raised NICs. So what we're reporting this morning is
National Insurance contributions.
Correct, yes, taxes on workers are paid for by business. We're reporting this morning that then she might seek to end an exemption for capital gains tax on high-value homes being sold. This comes after some reporting from sort of The Guardian and The Week talking about reforming council tax, property tax is also there. Look, I can tell you that a number of sources in sort of left-wing think tank worlds have been called into Downing Street over the summer with various policy proposals about how to change this. VAT, you could have taxes on gamblers, taxes on bank surcharges. These are all ideas floating up. And now Downing Street are starting to sort of fly kites and leak things to the press and say, what do you think of this idea, and see what reactions come back. So for anyone reading this stuff this morning, I would not say like, oh, well, this is definitely going to happen. This is the start of what is going to be a few months of Labour trying to figure out how they would raise the money to keep the state going in a way that pleases their party, the public, and also the economists who follow this stuff.
So we're in kite flying or balloon floating mode in terms of these potential policies. Some of these policies would be relatively easy to enact. Some would take months, possibly years, according to the Economist looking at this. What is your understanding of which policies are kind of front and centre? Which ones are most likely, in your view, or which are being giving most attention, given the pressure that this Chancellor is under right now?
Well, I mean, to take the famous saying, you rob a bank because that's where the money is. In the same way, we're looking at the property sector. That's why this has been the first stuff to start coming out, because there's so much money in UK property. There's a lot of talk about reforming council tax because it's something that policy wonks have been angry about for years. That sort of a lot of council tax is based on 1990s valuations of properties. That, if they chose to do it, would be hard to do in this Parliament, just the sheer amount of local finances you would need to reform and how it would change how councils are funded. Changing things like stamp duty on properties, that's a lot easier to enact. The question would be is when it would then come into effect. So that would be easy. The real sort of interesting one would be if they went to go for something like VAT, which is really quick to do, but would break a manifesto pledge. And that kind of speaks to the big dilemma the Chancellor has, which is Labour MPs had voted down her welfare changes. That was entitled to sort of change how Labour would spend and cut spending. Taxes, a lot of the big easy ones, the ones that would raise money and be efficient, involve her breaking manifesto pledges. A lot of the stuff like on gamblers or bank surcharges is kind of scrabbling for money around the edges. The other option they have is they could go back to the bond markets and try and raise more money, but that risks a repeat of the Liz Truss mini budget. And as we're seeing, long-dated gilts are moving higher and higher. This triangle of pain, one of those pillars this autumn is going to have to crumble. The question is which? OK, the Chancellor's triangle of pain. James Walcott, thank you very much indeed. What options the Treasury is considering in the lead-up to that budget, and not very enviable, at least at this point. The UK government, meanwhile, is preparing to take control of Tycoon Sanjeev Gupta's steelworks should they fall into liquidation. Lawyers for a creditor to Speciality Steel UK, part of the Liberty Steel Group, told a London court that government officials were preparing to appoint special managers in the event that the steel operations are wound up. The firm, which employs more than 1,400 people, is teetering on the edge of insolvency.
Coming up, Africa's richest person has built a $20 billion oil refinery in Nigeria. But will it benefit Nigerians or just the owner himself? We'll discuss that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Africa's richest person, Aliko Dangote, has built a $20 billion oil refinery in Nigeria, bigger than any in Europe. But critics are questioning whether his dominance will truly benefit the nation or mainly enrich himself as he seeks to ban foreign competition. Joining us now for more on today's Bloomberg Big Take is Jennifer Dabasaja, who, of course, is our correspondent based in Africa. Who is then, Jen, who is Dangote? Talk to us about who this man is and how he became so wealthy and how significant this refinery is for him and for Nigeria.
Yeah, Tom, I mean, many people globally should know who Dangote is. But if we think about it from the context of the importance of Dangote to the Nigerian economy, he is somebody who has been in the commodity space for decades. Since he was a young child, actually, the Dangote family has been a part of the commodity space. But over the past few years, made most of his billions with Dangote Cement, which is the company that is traded on the Nigerian Stock Exchange. Billions of dollars. He's made billions of dollars from that aspect. If we think about the significance, though, of the refinery that he has just unveiled in the past year or so, there's quite a few points that I wanted to point out. Nigeria is Africa's largest oil exporter. It's also the most populous country that within OPEC. But if we think about the past few years, has relied solely on exporting crude to Europe and elsewhere, only to be refined and then sent back refined into Nigeria. And the government has had to deal with things like costly imports. There's also corruption that's being added to this, and also subsidies. So this has been a complicated story for Nigeria. But now, since the refinery has been built, we've actually seen Nigeria become a net exporter of petroleum products for the first time in 3 decades. We've seen a number of oil majors that have projects offshore actually start to wind down their operations. If we think of Dangote from the perspective of being the wealthiest person in Africa, just in the past 3 months, his net worth has increased $1 billion to $28 billion. So yes, this has made Dangote even richer than he was prior. But if you talk to him and you talk to others who are watching this from the sidelines, this gives Nigeria finally an opportunity maybe to wind down some of the costly imports that they've had to focus in on for fuel, and potentially then can actually fuel can actually be a contributor to sales for the Nigerian economy. But as you were mentioning in your intro there, Tom, many critics, though, are saying, is this Dangote then just securing even a tighter hold on the Nigerian economy, or will it ultimately then benefit Nigerians who have had to pay a lot of naira over the past few years for oil?
Yeah, maybe the answer is a bit of both. What is next then for Dangote?
You know, I mentioned he's been in the commodity space for decades now. We recently heard that he is going to be retiring as chairman of his company, Dangote Cement. They named an EcoBank executive, a former EcoBank executive, to the chairmanship. But still, he's not going anywhere. And I think especially as we see this refinery continuing to ramp up, his expectation is that this is going to continue to be a boon for the Nigerian economy. When we think about commodities, though, and the aspect that could potentially provide to the Nigerian economy, Dangote is focusing in on fertilizer. He actually wants his fertilizer plant to be the biggest in the country. And he also is looking at and targeting the biggest, deepest seaport for Nigeria, and is looking for a permit in order to get that approved. And so, again, it sort of goes back to the question of, is Dangote just continuing to tighten his grip on the economy with the government, or will this actually benefit the West African nation and ultimately the continent if we take a look at it even broader?
Okay, Jen Sambasaja in Johannesburg on the Bloomberg Big Take, which, of course, you can get more details on Bloomberg.com and on the terminal. Jen, thank you. Now to the auto sector, where Ford is looking at developing a supercar for off-road racing as a follow-up to its new $325,000 Mustang GTD high-performance sports car. CEO Jim Farley said he sees the vehicle as a dirt-loving, high-performance machine that could compete in the Dakar Rally Desert Endurance race in Saudi Arabia.
I'm very interested in that. The off-road, the on-road performance hierarchy is very simple to see. And the very top is overserved, in my opinion. But no one's ever done this off-road supercar.
Plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So we'll focus, of course, on what's happening in terms of the tech story and how vulnerable some of the tech names are to potentially a Fed Chair, Jay Powell, who comes out and says, you know what, we're not quite in the mood to cut rates in September. But worth bearing in mind that there are 50 companies within the S&P 500, of which the Mag 7 form a central part, that actually gain more on higher interest rates than in terms of their expenses on interest. So their expenses on interest are overrun by the interest income. And you've got the likes of Amazon at the top of the list. But even Tesla makes more money from higher interest rates than it costs them. So just worth bearing in mind as we think about the potential vulnerability, higher rates for longer, if that's what is signalled on Friday, tech is resilient in that environment, even as it affects the valuation models. Let's split the board and have a look at another specific tech stock. Palantir has been one of the champions, of course, of this year. Year to date, you've still seen gains of about 100% for Palantir. But my goodness, the selling pressure has been there for this stock over the last few days. In fact, you've had about $74 billion wiped off the market value of this company. 6 straight sessions of losses for Palantir, and a rare win for the shorts on this business, pocketing $1.6 billion. But that is not offsetting the paper losses for these short sellers in Palantir of $4.5 billion, given the stock has run up, as I said, over 100% year to date. We'll see if that story continues on a stock that is seen by many as distinctly overvalued. Let's flip the board and have a look briefly on the performance of the FTSE 100, the 24th record high for the FTSE 100 yesterday. And part of that is precisely because it doesn't have much exposure to chips or to AI. That defensive tilt benefiting the FTSE 100, and we'll see how that index performs later today. I'm going to be speaking, meanwhile, to the chief executive of Novonesis on the Pulse later this morning on the back of their earnings. But before that, it is the opening trade. Stay with us. That's up next. This is Bloomberg.